Good evening. This is Tom Alexander. It is Sunday, October 9th. It is about 4:15 Eastern Time in beautiful Charleston, South Carolina. This is the video addendum to the written report you've all received. If you are finding this on YouTube and you're not receiving the written report, shoot me an email. I'll put you on the list. Tom@alexandertrading.com. Just say, please put me on your list. I'll put you on the list. Okay, yet another crazy week in the books, and we probably have another crazy week ahead. What we're seeing, guys, is classic behavior of a bear market. Bear markets and bull markets are very different animals. Pardon the pun. Bear markets are characterized by high volatility in both directions. They're typically narrative driven. And we also have the price breadth relationship at the moment exhibiting classic bear market behavior. I've talked about this, and I've talked about it for years, but I've talked about this especially in the past couple of months, how to use price and breadth. And at times you can get incredibly great signals, and you can also get really great signals intraday for those of you that are day traders. We do have a live trade room, and we update all of this stuff in real time during the trading day, point out opportunity levels, etc. Okay, so let me, in the report, I'm sort of scrolling through it here so I don't miss anything and I stay in some sort of logical order. And, it's Groundhog Day. We are once again testing levels in all time frames. Let me show the screen. Okay. On the weekly chart, now these are daily charts. Let me just go to weekly quickly here. And once again, we took out this level. This was the June low. We closed below it the week before last. This week, we closed right at it. So we're sort of, that's why I said it's Groundhog Day. That's what I put in the report. Below these levels in these recent levels in the SPX and the NDX, there is really nothing until the post-pandemic high. We already have the Russell and the Dow. They have traded below the post-pandemic high, and they're holding by a thread here. So we are really in the same position that we were in last week from both a structural and a technical position in the market. Now, if we look at the daily view, and I'm just going to take the SPX because in any move of significance, you're going to see all four of the indices move in lockstep almost to the tick in all time frames. Now, at the moment, there are divergences around these recent lows. You have the NDX just barely above the low of the 30th. You have the Dow a bit more, and the S&P a bit more, and then the Russell is the one that continues to show some outsized relative performance. Now, if we're going to have some sort of waterfall decline, washout type of scenario, and this was the kickoff to it on Friday, you're going to see the Russell take out this low. And unless and until the Russell takes out this low, there's a bullish case to be made because you have these divergences. Now, we're coming into Globex in a couple of hours, and that may tell us a lot. Of course, I thought that last week, and it really didn't tell us a whole lot, but I'm going to think that it will again, and we'll see. But I'm going to be very surprised if the NDX doesn't spike to a new low. At least the NQ, the futures contract, to see if there's follow through. So next week, Monday in the cash session is going to be absolutely critical because, and I put this in the report. I'm not going to go over it again. I think I went over it in the video last week, but it's in the report regardless. There's a popular analog out there right now with the October 2008 period where we're down like 30% in 8 days. So that's still an overhang here. Could that happen? It could. But if it's going to, the Russell is going to take out this low. That to me would be, if the Russell takes out its September low, then you want to be paying attention to what's going on and see if there's confirmation, et cetera. But the bullish case here is that the NDX spikes to a new low, nothing else follows, and then you have these wide range reversal up days. That would be at least a short-term buy signal. Let's see, what else are we looking at here? Okay, the profile view, I'll just show that real quickly because I know a lot of you guys find me for market profile. And as I have said many times, you don't want to be a market profile trader. That was not, market profile is a graphing format. It can be a very helpful tool in helping to identify auction market condition, but so can a bar chart. It's all about the worldview. Now, from a market profile perspective, the information on this chart from the market profile perspective is that value continues to migrate lower. You also have a relatively narrow October auction that is almost certainly to extend in terms of range, maybe in both directions. I put two possible paths immediately that the market could follow immediately. They're in the report, so you can take a look at them there. Okay, internals. And once again, you can take this information. All right, I'll start with VIX since that's where I landed. VIX has been consistently and stubbornly high, but it has also stubbornly refused to reach any real extreme. It has not. I mean, we're so much lower, well, a lot lower than we were over here in this what is this March time frame, but VIX is lower and has been consistently lower at each lower low so far. So there are a number of people out there, analysts, traders, that are looking for this spike, this big spike in VIX up in here, and it hasn't happened. Now, if we are going to go into some sort of similar decline to that of October 2008, then I think you're going to see VIX spike 45 plus. However, if we don't do that and the market bottoms somewhere in here on Monday or Tuesday, then this is just the high VIX and the option machinations that surround that because of negative gamma will simply add fuel to the fire of any rally that begins from this level. Okay, if we look at breadth, now I keep real simple work on breadth. It's NYS. I use NYSE advancing declining issues. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. The blue is simply breadth. It's advancing minus declining issues. These green arrows are days on which breadth closed negative 2,000. You can see how clustered the negative 2,000 closes have been. So I think everyone keeps waiting for the resolution of this. Are we going to get, or are we close to this rip that we saw following? We had we had a rather dramatic drop out of from the June 2nd high into this June 17th low, and then ultimately we had a rip of almost 20%. So are we going to have something like this, or are we going to have the waterfall decline and we're down 5, 6, 7% or something, and that puts in a low. So once again, I've been saying this, I think I've said it very often in the bear market, and it's the nature of bear markets. I think we are close time-wise to a nice tradable low. Now the low off of this low was about, from bottom tick to top tick, was about 6%. So I would not be surprised at all to see, if indeed this thing doesn't just absolutely crater, see something like that at a minimum. Okay. And I put a bearish case and a bullish case. It's in the report. I won't go over that. I want to show this chart. This is something we use consistently in the live trade room that you guys that are day traders may want to consider using. And what this chart is, this is a chart of the day session, day session hours. This is the ES, the S&P Mini, and this is breadth. And in last weekend's report, I pointed out these lower lows here and this extreme divergence here. And at that time, I said, the chart below is another reason why I'm convinced we're going to see an immediate sharp move. Friday's lows were accompanied by as large a divergence in breadth as you typically see. This is going to be resolved in a very sharp manner. And indeed, in the next 2 days, trading hours, or not trading hours, but next two trade days, we traded up 5.4% in the futures markets. And that's from the close, from Friday's close to Tuesday's close here. Now we're in not too dissimilar a situation. And this is not enough of a divergence to get as excited maybe as this, but it also, I mean, you can see we went out at negative 2100 or something in breadth. If they're going to hit this market hard on Monday, I think we have a short-term low by Tuesday, regardless of how low we go following that. But this is very compressed in this time frame to the downside. So I think tomorrow is going to be extremely interesting, as will be the rest of the week. Now, let's look at a couple of other contracts. And I'm going to go to daily charts. And I don't think I put notes in the report, but since I landed on notes, I'll talk about notes. This has been just a relentless decline. And we've had a little bit of a bungee jump here. And now we're testing this low. So this low is going to be an important low in notes and bonds next week. Let's look at gold. Now, gold was decidedly bearish last week, but it has put in conviction to the upside. It has stopped at an obvious key reference area up here, but I would favor, based on this chart at this point in time, I would favor longs against about 1667, 1666. This could be a V bottom. If it is, you want to be buying gold, even if you have to buy it on strength. Crude. Okay, crude was definitively bearish coming into last week. As a matter of fact, I said we're making lower lows and lower highs. You had to be favoring shorts. What was needed was a close above 82.94, and indeed, that's exactly what we got. And since then, crude has ripped higher. I would favor long trades in crude. Now, crude is one of these geopolitical exogenous event type contracts, so just be aware of that. And then the last contract I want to look at this evening that I'm follow and trade very closely is the US dollar. And on all time frames, I'm going to make this a continuation chart. In all time frames, this market is trending higher. You know, the migration of value is higher in all time frames by any measure you want to use. This is a monthly chart, and you can see the next price level. And of course, this was so long ago. This was back in 2002. I don't put a whole lot of weight on it. What I do think is that this is a rate of change off this low. That now this is monthly, but off of this low, this is an unsustainable rate of change. It's just it's unsustainable. Well, let's go down to a weekly chart. And again, you see there was a potential selling tail that formed last week, and then now we V-bottomed. But this area is going to be very important to watch. This area up in here this week. Now let's go down to daily. And you get just a more granular view. And of course, last week's lows are going to be important to the downside. You can see we've ripped higher off of those lows. And you can see, you know, the trend is relentless. We're clearly making higher highs and higher lows. And until that changes in this time frame, the trend is up. Now, the way I'm approaching trading the dollar and other currencies, I'm going down in time frame so that I can enter on a 30-minute, 60-minute chart and have less risk. But I'm not particularly excited about chasing the dollar to the upside on a position or swing trade type of basis because it's so extended in all time frames. Guys, I hope you found this helpful. If you did, please like it. Please subscribe to my channel. And if you hit the notification bell, you'll be notified when I post new material. Thank you. You guys enjoy the rest of your weekend. It's going to be a fun week. So I'll talk to you soon.